Monot.
Thank you very much, Mr. President. I've got two questions. Having used all your cartridges, monetary policy is really non-conventional with TLTROs and now buying up member states' debt. This is ultra-lax policy for the ECB, destroying the value of the euro as a fiat currency, as a paper currency. Now that's reflected in the stock exchanges, but not in the productive economy. On the 9th of March last, supranationally, you launched QE with the 1,400 billion, which is going to last at least 18 months. That's a last chance saloon thing, and it doesn't respect the Tinbergen principles set out in the provisions of the treaty, not using monetary policy for purposes other than price stability 127A, not financing states via the euro system, and no using monetary policy for exchange policy purposes 219. In addition, it will not have escaped anyone's attention that QE decentralizes things to the national central banks, which really renationalizes it. And that, I think, confirms what the Front National is saying in France. And technically speaking, this is the end of the euro as a single currency, and that's led to a big depreciation of the value vis-à-vis the dollar. Sooner or later, the ECB will have to envisage the end of the single currency, and why not simply project that into the continuation in terms of national currencies. Now, with QE and the quality of the assets, some of them, that's ABS and CDOs, collateralized debt obligations and other things. Now, those securities, it was basically everything except gold, and that would have been the only valid asset. Now, across the Eurozone, you have bloated the ECB's balance sheet and the Eurosystem with junk securities. And it's very difficult to get out of that, quite apart from, as it were, printing money. And if you look, if you listen, for example, look at the moonwalk of Mrs. Yellen for the Fed. Now, looking at the base rate, have you looked at the financial consequences of exiting from the program? And who are you going to sell these junk securities to at the end of the program? Thank you very much.
Well, first of all, let me say that our monetary policy is gradually finding its way to the real economy. It's taken time, but we are seeing that this is happening now. So it's not only limited in its impact to the financial markets, as it actually was in 2012, after the August decision of OMT, certainly the financial markets regained confidence, and this was extremely important, of course, and the confidence in the euro was strengthened. At the same time, it's taken a long time before these impulses translated themselves into the real economy, and now this is happening. We are seeing this through a variety of indicators. The lending rates by the banking system have gone down. Credit is still subdued, but is increasing. Financial flows to SMEs are also still subdued, but they are increasing. So, as I said, we shouldn't be excessively optimistic, but we're certainly more optimistic, more confident than we were 3, 4, 5 months ago. Second, on the mandate, you raised this issue. By the way, your point is a little contradictory, because on one hand you say that we are renationalizing monetary policies. On the other hand, you're saying that we are financing member countries. So you've got to decide which one. My view is that we pursue the price stability rule, a mandate, and we stick with our mandate, and we have no fiscal policy in mind. And I think all our legal analysis seems to confirm that we are fully in the right. Third point about the exchange rate. You are saying that this policy is geared to the exchange rate. Nothing could be further from the truth. The exchange rate reflects the different position that countries have with respect to their business cycle. And the monetary policies are on a different cycle themselves. So our monetary policy will stay accommodative for the foreseeable future, and other jurisdictions' monetary policies are expected to become tighter and tighter because the recovery is stronger in these jurisdictions than it is in our case. Fourth point, ABS. I think you should read the Fitch, the rating agency, Fitch report about the type of ABS that we are buying. They are considered absolutely safe, absolutely safe. And so from this view, they are neither rotten nor assets that will have any problem in selling back. Why not gold? Well, the answer is obvious. ABS are meant to supply financing to the real economy. It's not clear that buying gold actually produces immediately the same effect. Thank you.